Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro against the US dollar. An indecisive spinning top on Friday, but still a fourth bearish black crow as well. Prices were captured on the downside by a combination of the rising gold long moving average, currently at 115.91, the bright lower bull channel line, currently at 115.73, and that's from the July 25 to date shallow bull channel, and I suppose possibly the November 2020 low at 116.02. Above we have the green short medium moving average, currently at 116.53, the flatlining mauve medium moving average, currently 116.63, and the October 2021 high at 116.92. The action remains within the bright red shallow bull channel, currently 115.73 to 120.51. So far today, well, we're setting up for a possible daily key reversal, as well as a possible bullish engulfing pattern as prices dip down to the bright red lower bull channel line and then moved higher, to be capped right now by the green short medium moving average overhead. Cable, aka sterling against the US dollar. An indecisive doji cross on Friday after the previous session's bearish black crow. Prices were captured by the support from the flatlining mauve medium moving average below, which is currently at 133.61, and the overhead gold long moving average, currently at 134.07. Please note, the gold long moving average had not been very effective in the previous session when it was hit from above. Below we have the important congestion between 132.59 to 133.11, made up from, and this is just a few of its constituents, a pair of head and shoulders neckline extensions currently at 132.59 and 133.11. And that's of the May to July head and shoulders top pattern highlighted in purple, and the August to October head and shoulders top respectively. This one was highlighted in bright red. Meanwhile, overhead we have the 2024 high at 134.36, and then a band of congestion that stretches from 134.83 up to 136.43. Overall, we're in a fairly wide but very shallow dark blue bear channel dating between early July, early August as a start. Currently that's 130.06 to 136.33. Now so far today, a gapping move lower since filled in, that dropped down to the rising green short medium moving average, currently at 133.23, and almost down to the purple neckline before turning back up and testing the gold long moving average from below. We may also have a combined daily key reversal up and bullish engulfing pattern here today. US dollar against the Japanese yen. A reactionary bearish black crow on Friday after the previous session's counter-to-counter bullish thrusting pattern. The market continues to try and stabilize up over the previously breached bright red upper bull channel line. It's currently 157.11, and that's of the April to November 2025 breached but seemingly not fully broken bright red bull channel, which is currently 150.10 to 157.11. It was nevertheless still a move up and above the bright upper trend line's extension to the October to mid-November 2025 bright red ascending wedge pattern. Now the primary target X at 157.90 was reached 2 weeks ago, but we still have a further harder to reach secondary target X1 up at 159.65. This secondary target is a gateway to some overhead congestion between 159.61 to 160.34. Meanwhile below, under the breached bright red upper trend line, we have the rising green short medium moving average, currently 156.14, and the congestion based around the June 1990 high at 155.78. So far today, a lower open and a dip down towards the bright red upper trend line before a pull back up, not quite making it down that far. US dollar against the CNH, the offshore Chinese yuan. A bullish army on Friday, if only just, after the previous session's second bearish black crow. The market has spent most of last week, indeed most of this new year so far, trying to push down through the September 2024 low at 696.90. Further down, well, we really only have the bright red extension to the upper trend line, currently at 692.94 of the May to August 2022 ascending triangle, before we reach the May 23 low at 689.53. Meanwhile above, we have the September 2024 low at 696.90, and lesser Fibonacci lines at 697.69 and 699.89. So not that impressive either. The next resistance beyond this is the declining green short medium moving average, which is currently at 704.35, though I do note the possible roundophobia from the big 7-0 number, 7 even number. So far today, well, a further decline, making a new low not seen since May 2023. US dollar against the Brazilian real. An indecisive spinning top on Friday, verging on a possible indecisive doji cross after the previous session's immediate countering bearish engulfing pattern, which was only just. The market spent most of last week in between the July 2024 low at 536.76 below and overhead the combination of the mauve medium moving average, currently at 538.95, and a flatlining green short medium moving average, currently at 540.19. You could argue last week might be a form of bearish halfway hesitation, but I find that a rarefied argument. Overall, the market is still in between the declining dark blue middle time below, which is currently at 528.47, and the dark blue upper time above, currently at 554.38, and that's of the mid-December 24 to mid-April 25 bearish shift pitchfork. And this pitchfork continues to be the showrunner for this market. US dollar against the Mexican peso. An inverted hammer pattern and fifth bearish black crow on Friday after the previous session's unusual key reversal down. Now, inverted hammer patterns are controversial, as many technical analysts do not regard them as seen traditionally as bullish reversal patterns, but more akin to a bearish continuation pattern. Now, we shall see today if the market chooses tradition and a bullish reversal or a bearish continuation. It was nevertheless the lowest low and low close since July 2024. Support came in from the combined August 2017 and July 24 lows, both at 1759.58, which is a part of a small congestion band, 1756.93 to 1759.58. Overall, we may be within a small November 2025 today based bear channel, which is currently 1750.39 to 1795.47. This is not too well defined as a bear channel, but it is still nevertheless there. So far today, well, not much. A small reactionary move back up from the combined August 2017 and July 24 lows, but not too far.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.